Well, okay. Hello, everybody. My name is Alex Mongolov. For those who doesn't know me, I'm a real estate broker here in beautiful Petaluma, California. And today is April 28th, 2020. And we are in shelter in place. COVID-19 is going on. And I'm sure that in a couple of years, we're going to look back and think, wow, what a crazy times we were living in. Same like we were we are looking now at events of September 11, of when we're looking back at crisis of 2008. There is lots of events going on in everybody's life, And what bothers me the most right now, I understand people worried and people are kind of stressed out about all this economy situation, what's going on. And I think that, of course, people are losing money, people are losing jobs, people are worried, but there are many speculations which are really bothering me that we're going to go in a recession, home price is going to go down drastically. And for me, it's like you guys hoping for third world war to happen. It's like today in the morning, actually, I got an analogy that you are applying for a job and somebody who is more qualified than you are got the job, and you're hoping that he's gonna drive off the parking lot and get in an accident and get disabled or die, So the boss calls you back and say, "Hey, I need you. Come take a job. So it's the same. Like you guys hoping for economy to go down. It's something major has to be happened. So for your own benefit, it's very selfish, I think, and I don't want this to be happening because if prices going to start really dropping really low, we're in big trouble. I don't know how many of you remember 2008, but it wasn't funny when you're driving through the neighborhood and you see short sale after foreclosure, foreclosure after short sale, foreclosure after foreclosure. It's not funny when people are losing houses. So for hoping for that, it's mean, and I hope it's not going to be happening. And by looking at the market, I don't think it's going to be happening as well. To support my argument, I would like to bring a second opinion, and that's why I'm bringing a wonderful Michael Belfor with American Pacific Mortgage. Michael, welcome. Thank you for having.
Thank you for having me, Alex. I appreciate it, man. Glad to talk on this subject. I know we've been talking about what you're talking about quite often, and it's coming up, a lot is, what are our thoughts in regards to the market and stuff. So thank you for having me.
So what's going on in your world? Are you super busy with refinances right now? I assume that because of interest rates are so low, so many people are trying to refinance their houses, right?
Yeah. Yeah. I mean, we're slammed. Refinance market's been incredible. We started to see the market kind of drop a little bit with the COVID-19 concerns starting in February and going into March. To give an idea, last year we closed over 100 transactions. Currently we've already closed 35. We have another 50 that we're working on. So we'll be on probably 85 transactions by the end of May. And, purchases are still due. So, I think probably by the end of June, we probably would have already done what we did last year as a whole. Industry-wide, it's like that, which is incredible. Because, interest rates are low. As most people think, any loan under $450,000, you're really going to get a historic low, an all-time low for an interest rate, which travels anywhere from 3.25, 3.5 right now on a 30-year fixed, and is as low as 2.75 with an APR of 15-year fixed right now. So it's just a really incredible time, and obviously a lot of interest with people trying to take into that right now.
Okay. And how does it apply to the loans for the purchases? Are you guys really slammed as well? Or you
Yes.
a little bit like slow down?
Yeah, so the purchase market's actually very busy. The big thing that we have is, we have a lot of people looking to purchase homes or even find out. We started hosting these first-time homebuyer webinars over Zoom every Wednesday, getting a lot of people joining these things just to learn about home ownership as it stands. A lot of people do have the thought that you mentioned in saying that they don't think, now is the right time because the market's going to crash. But I put together a whole Zoom type of webinar or vlog unpacking charts as to why we believe that will not happen. But as far as home buyers, we've gotten, 6 ratified contracts in the last 8 days. So we're still, getting a lot of people into escrow. They're purchasing homes, taking advantage of it, but still there's people waiting on the sidelines. The unfortunate thing we're seeing, and I know you're seeing this too, is we're seeing listings not hit the market. And I feel like we definitely need more listings right now because there's an abundance of demand with people looking at, but not enough properties listed on the market even right now, which is interesting.
Right. And, I actually wanted to show you my screen just to support your argument here. Give me 1 second. Can you hear? Can you see this?
Not yet. No, it's just yeah, I could see a screen here.
Okay. So you see right here, I have 239 buyers in my database. It's I'm a single agent, and I have 239 people only this week looking at the houses.
Yeah.
Now let's go to official MLS and see how many houses are out there. So I put the regular like really easy search below $1 million in Marin County and Sonoma County. Mm-hmm. And those are the houses which are coming soon, because everybody are waiting that there's going to be a flood of inventory coming after shelter-in-place is lifted. And look here, it's only 235 listings are coming soon. So remember this number, 235. Now we are going to look at how many listings went on the contract since March 17th when the shelter-in-place was ordered, 309. And 428 listings in both Sonoma and Marin County was sold. So guys, if you are hoping that it's going to be more houses and it's going to be price is going to go down just by simple supply and demand equation, you may understand that I'm as a single agent, I have 239 people looking at the houses below $1 million price range, and only 235 is coming on the market soon. So that means that any other agent probably have pretty much the same, like I do, the same amount of people in their database, right? They have as many clients as I do. So inventory is pretty short, and as soon as those orders gonna be lifted, I think buyers gonna flood the market and prices gonna actually go up. What do you think, Michael?
I think that's exactly right. I mean, the simple, in real estate, we have economics like anything else that is a sales-oriented type of field. And the basic economic factor is 2 things, right? Supply, demand. So if there's a demand for housing and limited supply, and you have 236 prospective clients looking to purchase a home with only 235 coming soon, that means that these people are going to make offers, but they're going to make offers with an abundance of other people. And so I think, really the key is getting ready now, because what we have to remember is supply and demand. If there's a demand for a housing, you're going to run into multiple offers. We've seen that in the last 7 years. What multiple offers do to a property is, there's a bidding war. Bidding war creates appreciation. Appreciation means home prices will actually go up versus go down. And this is especially here in Northern California. A lot of people thought oh my gosh, well, I lost my job. Well, a lot of people did lose their job, unfortunately, with everything going on. There are a lot of people that actually qualify for unemployment. So don't look at the employment number in our economy as kind of your template either, though. It's unfortunate if you did lose your job. Granted, there's a lot of people who are furloughed, meaning we don't have a true unemployment number. We have an unemployment filing number, but not a true unemployment number. What we have to remember is there are a lot of people who qualified for unemployment that are employed because their HR, their bosses, the managers that they work for essentially said, we're going to give you furlough, meaning you can qualify and apply for EDD because we cannot pay you at this time. You're going to have to abide by the shelter in place. By filing for this, it essentially means that, yeah, they can't work from home, as a lot of us can, but they're going to go back to work eventually. What we have to look at is a couple of months out, when people start going back to work, they're going to want to purchase a home perhaps, or they're going to be back at work. So we're going to see a better unemployment number then. That's going to be corrected. Secondly, if you think about it, there's a lot of people that usually buy this time of year. This is their spring buying season. We're currently missing our spring buying season. Essentially, it's being pushed out. Unless if you're out there and you're with making an offer, making an offer and getting the escrow on time. You'd have to, with all these people planned that saved, that were ready, pre-qualified or pre-purchase a home. If you're waiting at home and you decide to step out when shelter-in-place lifts, you're going to be with that spring buying season that was basically hedged for this period of time with everybody else that comes out with the summer buying season. So you could have 2 to 3 times as many people looking to purchase, which again create more of a demand and a lessened supply. So really, it's going to be an interesting time, and I think getting ahead of that curve is really the best thing anybody can do right now if your intention is still to purchase a home in this year, because otherwise you're going to be basically compounded with the buying season of the spring and summer, and those people who are back at work ready to purchase a home. And then you're going to have this abundance, which will actually not cause home prices to come down, but instead home prices, especially here in the Bay Area, will go up. Is my thought concerning really any of that.
Yeah, I totally agree. And what do you think? Like, okay, let's say a person lost a job, right?
Mm-hmm.
What's your advice on that? Should he still apply, even though he doesn't qualify at this moment because there is no verification of employment possible? He's laid off or he lost his job. What should he do?
I think the big thing to do is, if you still want to think about purchasing a home and you feel like you have a sustainable industry and an industry that you're going to do. So, again, 2 things, maybe back up on that. But if you are furloughed, knowing that you're going to go back to work, then yes, obviously apply and get ready, knowing that eventually when the thing lifts, your employer is going to take you back. If you're truly unemployed and you did get laid off, my heart's for you, and I'm very sorry to hear that. However, my advice would be for anybody looking to do that is, still maybe look at your credit report. See if there's anything that you can manage. See if there's things that you can start thinking about, knowing that you're in an industry that is sustainable, that you will be back at work eventually, even if it's 6 or 9 months out. We've had a number of clients that I worked with over the last 17 years in my own career that waited a year or 2. But we still had our initial conversations now. And if you're still at home, you're thinking about purchasing a home and that's your end goal, it's still wise to at least get set up, to get prepared and know, hey, I don't have a position now. However, I know that, within a year I'll be set up. I'd still like to find out or learn more. And we wouldn't discourage really anybody from learning more about, getting set up in regards to purchasing home or learning more about purchasing home for that matter.
Okay. So still get ready. Yeah, cool.
Absolutely.
And let's say, would it affect this disruptancy of employment? Will it affect your potential purchase because you were laid off for a couple of months?
No, because what we look at when we do verifications of employment is if you're still employed. Even now with our refinances or purchase transactions that we're doing, we actually have a special form that a client would have to say, you sign basically stating 3 days before they're closing, I am still employed.
Right.
And we still have to do a verification of employment. What matters for employment is looking at current pay stubs or current income. If you're self-employed, we want to look at a profit and loss to show that the last 2 years you're gainfully employed. Then we get an updated year-to-date profit and loss. Granted, there might be a gap here because of everything going on. However, what we're looking at is what's current. and if you're self-employed, what you've done for the last 2 years is an average, and showing that what is now is current or still in with what you had done in your last 2 years, if that makes sense. So it doesn't matter. I mean, you can have, no employment for, let's say you're working for Apple 5 years and you get laid off, and then you have the 6th gap, and then you go and work for Twitter, another tech company, essentially doing the same thing. If we got this verification of employment from Twitter, which is the same industry as Apple, and you only worked there for 1 month, we could still qualify you to purchase a home because you took a new position, but it's in the same industry. And we could prove with the pay stubs that you're receiving, it's still within means of qualifying based off of your income, because that's the current pay stub that you're then receiving.
What about people who are saying that they're not going to be qualified anymore? Let's say, I know that tax ID numbers are not eligible any longer for purchasing a house. I heard that no down payment program is shut down currently. Is it true?
No. We still have Cal HFA. Yeah, in fact, I'm doing one of those right now. And I actually closed another one last month. Cal HFA is still available. Certain lenders and banks have basically turned down that as down payment assistance. So it's essentially, if you're putting 3% down, if you don't have the means for down payment, this is a great way to help with that. And it's using, the Cal HFA program if you qualify for it. So you can still do that, but we still have to qualify income and your credit score to qualify for that particular program. The ITIN programs for the time being are not really available. We did have some programs that were available, but unfortunately they're put on pause right now. They're going to be back. DACA programs though, DACA is still available. Okay. So you can still do DACA home loans for people. So, if they're saying they're not qualified, it's really just a question of, let's have that conversation to find out why. A lot of the stuff is simply just put on hold. It's not here now, but it doesn't mean it's not going to be here for 2 months from now. As things start to open up and return to normalcy.
As I said, get ready, guys. Just put your paperwork together and then just send it to your lender, and the lender will walk you through the process, what exactly you need to add when you're going to be ready. Instead of jumping around when you want to see the house, when you like the house, and start to jump around, gathering all those documents, and then missing out on the house which you might be loving. Right? Now, my question is, what would be your advice to people who own a house and they are behind on their payments? They lost the job, they get laid off. What should you advise them? What to do?
Well,
you don't want to go into default, right?
Yeah. It's funny because, in 2008, we had a crisis, and the crisis was brought by these loan programs that were, 103 loan to value, meaning not only are you getting the entire loan financed, but the bank is willing to pay for your closing costs as well. Those things were really available, and it put a lot of people at risk. I mean, no one really had equity. We also didn't verify income and assets industry-wide, right? And so now we do due diligence. There is no 103 type transactions where you're immediately underwater as soon as you buy it. So if you do run into a situation versus 2008 to 2010, and this is why really kind of the median reason, or the main reason, if you will, as to why we're not going to see the housing crash we saw 12 years ago, is people have equity. If you look at a nationwide consensus, over 50% of the people that own their home have at least 50% of equity in their home or more, which is a fantastic number. 37% have their home free and clear. So you lose your job, you're unemployed, I would say list your home, sell it is one option. Another one, if you want to keep your home, you could look into preparing a hardship letter and calling your lender and asking them, not for forbearance, because a forbearance is a very scary thing. They didn't really provide details when they announced the forbearance. I'll go over that in a moment. But seeing if there's a way that they can do a modification. And they do want a hardship package, but say, hey, we had a job loss, we're out of income, this is our current bills, and you kind of give them this documentation, your lender, loan servicer, or mortgage company, and see if you could work with them to get a loan modified. Two things. Most people have the equity to do so they don't, have their credit tarnished. They don't have to worry about a foreclosure or anything, horrific. And we need listings, so your property will probably sell. The second option is a loan modification. And I think those are really the only two options that one should think about. If you think about the forbearance, just to unpack that briefly, the forbearance was announced with the CARE Act. It's not a great program. In fact, it's a horrible program. What it essentially does is there are options, and every loan servicing department is different, but by and large, it can create a balloon payment. So if you have a payment of $3,000 a month and you decide that you're going to do this forbearance, you don't have to provide your lender with a hardship, but they'll approve you anyway. Let's say you do this $3,000 a month and you skip 3 months. So April, May, June, you skip. Then when you're saying you're going to go back to work in July, rather than paying a $3,000 monthly payment for July, you owe your mortgage company $12,000. So that's going to create for a lot of people a lot of difficulty. Now, that's just one scenario. I know 2 loan servicers that really have this program, which is unfortunate. So I really think the best thing to do is, again, a loan modification, seeing that's available, or selling your property, or if you have any generalized questions around any of it or options, or just want to kind of unpack thoughts, of course, I'm a resource. Anybody could really reach out to me. Even if we haven't done your loan in the past, we don't mind kind of sharing information that we've seen and what we know and helping you through that process as well.
Great. Do you think that there's going to be higher and more strict requirements on getting a loan in the next couple of months?
I think we're already seeing that, to be honest. We saw basically, the joke was, when this started to happen, lenders went back to do 2008 playbook, meaning we did in 2008, they just reverted to immediately to eliminate risk. So that's why we saw like what we call our non-qualified mortgage products, like a bank statement loan, and we had investment loans available and bridge loans. They all went away almost immediately. And what they started to do, and we heard about, other banks raising credit criteria for minimum credit scores and things like this as well, to basically help with, the mitigation of relieving any, tension that could come from, a risk client is what they associate lower credit scores with, for example. They did that playbook already. So guidelines got tough. And they got super tough, super quick. So we already went back there. I think we're already in that space now, where underwriting guidelines are as tough as they were, 10 years ago, to basically mitigate that. So I don't think they could get really any tougher at this point.
Is it their way back? Do you think they're going to be?
Absolutely. I think they'll turn around for sure. 10% down jumbo home loans, for example, will probably come back. Lowering the credit standard from 640 for FHA, maybe down to 620 with other banks may come back. It's just a matter of timing as to when. Right now, it's just, the markets are so tight with the amount of lending and demand that's going on. To kind of paint a picture, last year was the biggest year that the mortgage industry had. We funded $2 trillion in our industry-wide. So among all the bankers, mortgage companies, what have you. Right now, they're essentially in the last 30 or 60 days, they're trying to fund $5 trillion. So yeah, it's nearly 3 times as much, right? So with that, we're in this stress of just lack of capital. And so by doing so, they want to make sure that there's still capital maintained in the event there is more foreclosures. These banks do get hit, so they're mitigating the risk by basically raising these standards for the time being. Once normalcy returns, whether it be a few months from now, maybe 6 to 12 months even, I think you will start to see standards and underwriting guidelines ease up as a result.
Good. So still going back to my point, apply now, even though you don't qualify, maybe in a couple of months, the requirement is going to go down again. And
absolutely.
Yeah. Okay.
Yeah.
Michael, thank you so much for your time again. How do people who are watching this video, how they can find you? How can they reach out?
Oh, for sure. You could really call me or text me anytime. You have my number, Alex, but 415-814-2937. On social media at the Belfor team. So you can find me on Instagram through the Belfor team, or just go to my website, mikebelfor.com.
Perfect. Thank you so much, sir. Thank you.
Thanks so much, man. Have a great day.
You too.